So I built a 4-period linear weighted moving average cloud system. I took a 4-period linear weighted, not exponential, because exponential's too laggy, and a simple laggy. The one that hugs price is the linear weighted inside of MT4. So when you adjust the values, you're going to do the you're going to set that on linear weighted when you insert moving average. Let's go to trend and go to, so it's a home kit. It's a do it at home thing. Set the color, set the fatness. Oh, it's money flow now because I deleted something. This is a bug inside MT4. I deleted something, put something in, changed the stacks, and now money flow. So it's, but trust me, this is trend trading. But it's also, I'm trading the vacuum between the 1 period and the other smoothed out moving averages. But this would be a pullback wave 4, right? This is, if I go up to the 15-minute chart, it's been an uptrend ever since it turned around here. So you went long here. It's like Akinashi trading, in essence, right? It's just a river crossover. And depending on which time frame is syncing up. Now you can just rifle through here because this is as far from reality as I ever want to get, is 4 periods. Because this, on the 1 hour, this means it's a 4-hour chart in essence, right? This is a 4-hour moving average, the white. That is the Hakanashi. There's even hardly a pullback here. But you need to buy the yellow below the white. You're buying inverted crossovers, right? Here's your devil's eyes here. You know, you got clearly delineated. It's painfully obvious, right? You can put a 5 period. Once you go past that, forget it. How can you trade that? So, you know, you can see the obvious. This is a whole day of trading. And it's also, the envelope's getting smaller here. If you measure the pip range from close to close to range to range, when these start to really zip up, you can also put a 1 period moving average on the highs, 1 on the low, and just trade the, these people call it like the snake side and stuff like that. Because when it explodes, like there's a kind of a button to press here. It's a trend button. Even the stop entry retail, supposed, you know, trend traders, I guess retail, this is people, I guess that's what that means. And, or the, you know, the idea that you're going to buy fresh highs and fresh lows, that's a whole nother killer trade, but they both work. And it works if you work it, right? It's like AA. But the thing is that you are going to constantly have to change your sizing on each ticket. So this is the way to overcome the madness of, hey, that was a good move, but God, that's fucking... I mean, when the news comes out, you're going to trade small with big stops because it doesn't make sense to go out in a storm and kite. I mean, every time there's a high wind alert, I'm thinking, aren't there kites made for that? Some guy with forgot drones. How about the guy with the Kevlar kite and the titanium line running? Right? I guess you have to make sure there's no, go to Albuquerque, make sure there's no power lines. I don't know how that works, but you always wonder about that stuff because under certain conditions, especially up here during this psychopathic volatility, there's certainly an opportunity to make money. You can see the trade plan. Buy, sell, you know, I mean, but it's how wide are you doing that? And if the grids are coming in, it's some, you know, you have this thing that there's not one repeating price in there. And also, you make it compressed so that the higher it goes, the more you're selling. And the flatter it goes, the more you're building a position during the flat zone, and then you're going to get out So now this is going to take out the high of yesterday on dollar yen. And you're cashing out all the way into that. Getting the sizing right because you want to ride the burst and then you have to just go into a accumulation phase just like the market's doing. And you know, there's just this perfect balance. There's this Goldilocks approach where you're in big when you need to be in big, and you're in small when you need to be small. That's definitely got to be the holy grail, because if you see a 10 pip move and you're in 40 standard lots for 40 milliseconds, and you just made the same amount of money it would take you to make in 2 weeks of conservative trading. That's quite a spectrum of lifestyle, right? Can you be the guy that's doing meth every night and then be the guy that's, flying a Learjet? Can't make a mistake. But in the market, you don't really have to be, you can be a meth head, because the market's does that kind of move, right? The reason why people don't like to hang out with people on serious drugs is they never know what they're going to do. They're unpredictable. So that's the problem with the market, is that, especially when it's calm too long, then stuff could go either way. And then, of course, once it goes there, it's the old classic, too many people on the one side of the ship, and they come flying back. You get this constant hemming and hawing. And the violent move, as you're getting stopped out, somebody's taking profits maybe. But I don't think it's us going to stop. You have the voids being filled. That's all that's happening. Now this moving average system, I'm looking for the void as the one period against the cloud. And then you have when all three of these are above the 4 period, you're in this most perfect looking trend ever, right? Then this end of wave 3, right? Wave 3 is the biggest wave. If you're Elliott wavetician, this has got to be wave 4, or this is an A, B, C, right? Whatever. But you had to be a seller up here. The ride's over. Like, if you bought these new lows on the 1 hour, you can't think any more than this much on the chart. At least I can't. Like, what happened yesterday doesn't mean shit right now. Like, if you're sitting and babysitting these goddamn markets like a psychotic meth head baby, she just brought home, like, you have a kid, right? And did you ever see that movie, Rosemary's Baby? Or like these kind of movies where, for us it was Prophecy or something. This born just elephant man stuff. Then, so that's your kid. Like, whoa, didn't see that coming. And then, but the markets are so ridiculous that you may think it's a crazy idea to buy low and sell high and throw a bunch of orders in there, but if you got the right exposures, right, it makes sense to build a cushion at the Olympics for the guy that goes over the pole vault, because they're like, hey, you know what? This guy's coming down. Let's build him an air mattress. And so you're building these air mattresses of orders. Because who can manage the violence? The more violence, the more money you're going to make. Or the more extreme movements, the more money you're going to make. So you want to be in on the big moves, but you can't get in that big, because the bigger you would get in, the more danger there is in just blowing up the account. So the Goldilocks theory is that you constantly adjusting the size based on the trade setup. So if the market goes sideways for 10 pips, 20 pips for 4 hours, there's a scalp or there's a big bank of buy limits and sell limits opposed on either side, depending on whatever happens. Like even here, this burst up here, and if you go to the 4-hour, you're supposedly in an uptrend and you should be buying. So even here, according to standard trend rules, let's assume everybody knows how to trade a moving average. When it's pointing down on the white, pointing down, you only sell. And this is as tight as it gets for a period. I mean, you step outside of that, you're just like in la la land. I mean, that's not the market. Plus, you can draw trend lines on this stuff. It's really a trend line, almost the one. Linear weighted, beautiful. And here, this is the hammer that's piercing the, but this could be it, right? This could be lights out. And the void is filled here on the 4-hour. So we filled this big vacuum here. And we came all the way down and did this whole engulf. It's over. Time to buy. And when the moving averages cross over here, it's this is the most reactive robot you can get. He's going to buy right here. He's going to say, you know what? We're getting in. It's in an uptrend. We're going to buy. We're in buy mode, but we're also aware of the ATRs. And I'm talking about, you're going to go really, you got to dial all the way down to trading such diversification of size and stops without any replication of any other stop. Because that becomes low resolution trading. Instead of high frequency trading, it's high resolution, high granularity, because you've got all these orders and they're meshed in there. And the time decays on these would matter, but on a daily, I gotta say, what's the trend here in the daily? Just turned up, but you would have been in sell mode. You could, hindsight, cherry pick this. We cross over here, you're short all the way to here, and you chopped a little bit here. Now here's where any good trend bot will get its ass kicked. But I think we could assume that this hammer being the exact head of a line shoulder, so you have shoulder, a doji to a doji. If you're into inverted head and shoulders, which all that is loss of momentum, where this vacuum, this triangle is about the same size as this vapor triangle here. So this constant, and there's really no chance it doesn't even close up. It just can't even, this is so extreme, but this is Hakanashi entry stuff, right? Now, the thing is that if you're on the 5-minute chart, hell, you got out of here and maybe you sold at the 109 obvious round number. And maybe you're going to, maybe you're done. And now you put in buy limits. This is what I do, is since the market's coming back and I don't want to add if I'm already in, I see how much I'm in. So this is the Goldilocks thing to keep aware of. So how much margin are you in? And how tight are your stops? Now this is a 15-minute script. Here comes the sellers. And the 15-minute chart says it's time to sell. Right? We just crossed over. The robot starts to sell here. And you have that inverted hammer 15 minutes ago. Okay, here we go. Sellers are coming in. So we're going to buy this plunge on limits. And if I don't get enough fill on that, I would wait another 15 minutes and I put in buy stops. I'm always, if I'm going to buy, always going to buy in limits first. If they don't fill, then I put buy stops in. And if I really think it's painfully obvious, at the moment you're sitting there, this presupposes you're going to babysit these fucking markets for like, this is like you babysit this kid, right? This Rosemary baby kid, so God, the kid just fucking was just brilliant, as they say. He did something brilliant there, because you catch all that on your iPhone now, people recording that. But, okay, so and it's also top-bottom territory, right? If you believe in breakouts, this top here just became a bottom. So this is closing, right? Precisely on the 15. Notice the turnaround exactly. Breakthrough, pull back. Maybe it's got to come all the way back to this internal, and this is a classic that you're going to come back to the... a great place to put a crop of buy limits is back down at the apex of this triangle right here. See the smash into, retest this. So you're always retesting congestion zones. Okay, so now there's a vacuum forming above, and we're going to place more buy limits and try to pick up this plunge. So they come in. The very top orders I made 10Ks. The next one, which is just what, 1 pip deep, 1 pip deeper, it's going to come in at 20K, and then it's going to come in at 30 and 40K. But master stop in there, and as it comes down in, it's going to, okay, here's the fill. As it crushes back into another pullback, but the market's really never going anywhere. This is the problem, is you have to be scalping, because look at the market. Is it really going anywhere? Anybody that went short here finally got their ass kicked, and anybody that went long here finally made their money back. So there's such a violent market. Okay, I'm going to buy a stop here at the 5 minutes. 5 minutes has gone by, so you look at the 5-minute chart. And it's in a downtrend on the 5-minute, confirmed, right? Robot's trapped. And what he thinks, and this is another thing, if you're watching this, you can just imagine what your robot, had you not get him strict instructions, and this is where you over-filter it, and now you've just built some, curve-fitted garbage. But here you can see the robot is short, and he should be selling, right? He's in a downtrend. All 3 moving averages crossed over the 4. And blow by blow, 5-minute chart. But I'm thinking more like this is a short-term trend. If I go to the 15, it's just beginning. It's the beginning of the end. We have to wait for, we have to wait for this pullback, this fill here. So a lot of waiting. Another problem with trading is there's a lot of waiting, and what do you do in the meantime? I think, just keep on increasing the resolution of the orders and the size, and just take it up. And, if there's enough money in the account to take a 20% hit more than usual, you have to gradually build the size of it. But you can get, if your broker lets you have unlimited tickets, all you got to do is go from a 1K to a 2K, and you've doubled your risk, right? You doubled your fun. That's all it takes. And if you only do that on half the tickets, now you can put in the bigger order closer to the stop and build these compression entries that don't have the, it's the probability that if it, in 15 minutes it can crush down 20 pips, you build a 20 pip deep order. But you might want to run that on the guppy. You may not see that move on dollar yen, but of course you saw it here. This dotted line is a 2 pip grid. This is the 20 pip grid. This is trapped in a 20 pip zone right now. There's plenty of trades in here, right? Who can't see the entries here? So from a trend standpoint, the robot went long here, then he sells, then he goes long, then he sells, then he goes long, and he goes short, but he might get crushed and he's going to have to go long. The only thing that's going to hurt him is when he goes long here and he doesn't take this money off the table, because the the 1 period has gotten really far away. It's severely overbought on any oscillator on the bottom of your screen, right? You don't need an oscillator on the bottom of your screen to see the, big ass move here. Wrong. I can't get the colors right in here. It saved my life. Now, if you want to justify your position, which is okay, but you got to realize as soon as you go to the next time frame, the stops need to be wider. But you'd say, oh, I'd still be in a buy mode here. And then the 1 hour, you'd be like, we're long. It's a 1 hour chart. But there's a lot of razzmatazz. There's a lot of punishment on the 1 hour chart. You're long, but hey, wider stops, at least 10 pips. Okay, so here's the plan, is that on the 1 hour, and if you zoom out one level, and then if you zoom out, this will definitely smooth it out so you can just see the most important moving averages, which is, when you look at it like this, it's just gorgeous, right? It smooths it out. Like, who can't get their fucking brain around this double top, right? 4 period moving average, totally zoomed, just noise filter, and as you zoom in, right, it makes sense. Let's not put a 20 EMA on this shit, for God's sakes, people. I used to do that shit. Oh, look at this entry here. I'm like, come on. Just go to the 4 hour. Put a 4 period moving average on. Isn't this how you want to, oh yeah, I've been short for 20 hours. Oh, got a buy signal down here. I'll hold through this shit. Like, you're going to make so much money, presupposing wide stops on this crap. And when you see this stuff, of course, you've always got the limit stuff running to capture the opposing party, right? And there's always the other side of the thing. Like, this looked like a perfect, hey, it's going to keep going up. But, the ATRs get small here on the bars. And the robot, if you're going to, you should be selling on this triangle here. You also contrarian entry, you get a hammer and 1 period dip below the 4 period linear weighted. Let's fix the scale on this thing. So here, it's looking like this, right? It's like cloud trading. Okay, so big pullback. We want to buy that, right? Another big buy. Here, right, big sale. How many times do you see that in the market? And so who can see that coming, right? Look at the 5. See the robots, it says you should be short. Robot's right. But we have to buy low. So we're going to buy down here. Okay. And then I'm going to put buy stops in. These will be my scalp orders. And then more buy limits. And I would wait till the bottom of the... wait till another 2 minutes go by and buy one at the market. Buy 3 at the market, and I put a limit into the key so it comes in at the market and it puts in the limit orders beneath there. So it looks like this. But right now, it just bought at the market and it just bought on limit. So the market's constantly going up and down. And, this is going on all day. And sometimes the market's dead. Now, for the 5-minute trend trader, he's got to be going in and out. You're just taking 2 pips. The dotted line's a 2-pip grid. You're taking 2 pips and run. Head for the hills. Okay, this is going to buy with like a 13 pip stop. Okay, now buy stops for the scalp. So scalp big for 4 pips. Then you're going to get another sell-off. Market's always going up and down, guaranteed. So it's what you do about it. Okay, so we're going to wait another 1 minute here. So I just bought at the market. 15 minutes went by. So buying every 15 minutes. It's a killer trade plan. You just can't buy when it's going up. You can only buy when it's going down. So it's dramatically down by a little bit. Wide stop and just wait another 15 minutes. If it's going up, don't touch it. And now this is all depending on how big you're getting in. So if you're buying, if you figure in the end you're going to pull the trigger 8 times, it could go down 8 15-minute bars in a row. And if you don't, and if it doesn't, you're putting these sell limits, buy limits in front of it. So I put a real thick order bank just in front of the market by what, 5 pips in front. Okay, now buy stops for the scalp. So I put a big order in here with a tight stop now. Still in a downtrend, according to the robot. According to the robot looking at the 5 minute, and he got confused here. He sold into this, but that's okay. We've come back into the middle of the road, fair value. We backed off. We haven't taken out the low from down here, so this is has to hold. So we just walk down this, and these stocks have been open for like an hour and 15 minutes or something there in Japan. So you're waiting. And so I would wait every 5 minutes. It's down. I'm going to put a buy stop in, and I'll put another buy limit bank in. Just going to walk into it. Walk into the lower prices. The robot has issued a buy signal, and I've been putting buy stops in as we've been dripping down, and the limits have filled. And I don't think I pulled the trigger at the market, actually. I think I only did the 1 15-minute buy, so you're just kind of buying every... And it's totally counterintuitive, because who's buying when it's going down? Well, this all depends on how much you're risking as it's walking down. And then when it starts to walk back up, and here you should be getting out of something, right? It's just the easy money for the turnaround. You're already out of something here, even though you've got a buy signal. Maybe you took 20% off the table. So that percentage is, the account gets bigger. The way that's dialed in is the difference between, you know, having a robust bank balance because of the taking advantage of each situation and get the perfect sizing for each situation. And 5-minute chart, right? So I've smoothed it out. It's really a 20-minute chart. The white line is the 20-minute chart. So you don't have to go to the 20-minute chart. And you can see the structure here. If I go to the 15, you're on the 1 hour chart, right? The moving, that's the 1 hour moving average on the 15. So the sells, we're just about to cross over and go into buy mode here. So we're anticipating the crossover. There's a perfect downtrend right here. Just complete perfect downtrend. All trends come to an end. And then there's an inverted hammer right here amazingly, right? Right where the crossover is at. So that's your hammer meets the moving average crossover, right? If you're going to combine candles with moving averages, they only make sense on the smoothed candle. But instead of taking the open, high, low, close, what Akinashi does is smoothing of everything. I'm only smoothing time. I don't care about the high and low. I can see it. That's the ATR, bar by bar. A ATR of 8 pips doji, or just an ATR of 8 pips, is completely different than 6. 6 would have a completely different algorithm, completely different sizing and target. Especially if you're going to run buy and sells. Now, you don't have to. You can just put your sell. You have a script written just for a 6 pip bar, and you press that button, and you are going to go the other way. Now, you could have the double and go the other way, right? But then there's this chance to get whipsawed. Now, if your exit is where the sellers are selling, you're going to go flat. You go from flat to in, or you're going to buy, sell, because, right, what's the alternative? Well, there's a blend between, right? If you've got a real good view of your speedometer, which would be your margin usage, and you would say, or how much fuel you've got in the car, then you would say, okay, this is what you can accomplish with all the keys that you have available, with all the scripts that you could possibly launch for each situation. Like, if the market makes a 4 pip dip in an hour and retraces 8 pips, and you're trading really big on that, you just made money. So that is acceptable. But you'd have to know that when you hit that button, it might be the same dollar risk in the end. If you set it up in a linear risk, every time you hit a button, it's $10. You buy a 1K with a 100 pip stop on one key. Next key, you're buying a 2K with a 50 pip stop, on and on, all the way down. At least then you know, hey, every button's the same. Every button is the same dollar risk. So each script is written to have. I saw this guy at the gas station, and of course the guy that owns the gas station decides he's going to put tape, electrical tape, around a leaking hose, right? And this is his answer. So I thought, well, maybe he's onto something. So I put my 75 cents in, and thing starts pumping, and I'm like, holy shit, this thing's taking air out of the tires. So had to go in and demand my 75 cents back. I wanted to give him a pro tip and say he should have gone with at least duct tape. But, gee, I felt bad. Guy, so I got on the street and paid 25 cents more, and it turned out only one tire was low on air, and here I'd like prepped the car for the ultimate retro. But yeah, that's the fun of. But the markets are just too rambunctious to you got to have the proper sizing for each situation. Okay, so it's the bottom of the hour, bottom of the clock here, waiting for another price pulse. We got a buy signal here. Moving average just crossed over again on the 15. We have a just before the crossover, we had a doji. It's good enough for me. If I see an inverted hammer like this on the 15, and I see that we're right at the end of the so-called trend, but any inverted hammer, right? Inverted hammer right into the cloud. Come on, this is dumbass shit, right? Doji before the next 15-minute session. So we're getting in before the crossover. Ride the robots are going to go, oh boy, inverted hammer, we're selling, but we'll sell up into that. Roller coaster, right? Market's a roller coaster. Here's a severe low ATR into the cloud, 15 sell. Right? Simple. But not simple in terms of making a fucking killing with the right sizing, because you got to get in heavy on the before the market heats up. You're heavy, and as it explodes out, you're scalping out of stuff, and you're got some long-legged targets that are already pre-programmed to just get out wide. So that's all decided in advance. And let's see if I can get the okay, I'm moving all these tickets here right now. So now when you're getting the thing scaled up, right? You start with a small amount of money. Now, don't ever put more than $100 in a trading account or $200, because if you can't fucking take $100 and make $120, you just should stop trading. No, you just keep trading, right? You just say, I'm going to trade X. And you can make $200 in a week, right? With a $100 account. If you're in big when you should be in big and small when you should be in small. And these small tickets might be floating out there, and you'd be surprised, 100 pips stop, you'd be surprised how much punishment you can take. If you're going to risk 100 to make 200, you risk $10 to make $20 on a 1K. And maybe you do buy at the market in that trade. You might want to buy like 20 pips deep just in case you're wrong. So, and you're gonna then now you've got essentially even a deeper stop. You've got a 120 pip stop from where you're at now. It's not really typically what's going to happen if you're excited and the market's going down, it's tanking. But if you're buying super small into that, and there's enough money in the account, you pull that 10 times, right? You're risking $100, right? Boom. You're risking $100. If you let the market go that far, maybe down 50, maybe, right? It goes down 50, you're like, oh, geez. And so that's how that works. But hell, you know, if the market moves 8 pips down and bounces 6 pips, and you have a 4 pip stop, you made money, right? You made money. I mean, the spread is really outside of the okay, so here we're going up, right? So now we're either going to expand our targets or we're going to add. So this is the hardest part in trading, is getting the sizing right to really, you know, you might be trading super big for 5 minutes, and then boom, you're in some tiny position that just, the accounts are, you can't even blow the account up, even if you tried. So when you're trading a standard lot, I mean, amazing how much money you can make. But when you're wrong, you're getting killed. Or when the market gets too violent, all of a sudden you're like, holy shit. This is like going out in your boat and, you know, you're just on the lake and everything's cool, but all of a sudden some storm out of nowhere. You know, that's what can happen. So somebody can, you know, just imagine they drop a bomb. Imagine you drop a nuke on North Korea. That could shock the market. And the market's going to spill into the path of least resistance. It's going to go into the void. Where's the hole? So when it backfills, it fills the hole, and then when it goes the other way, right? So everything's about, we have a void, price vacuum, and so the thing to pay attention to is not the price so much, but this hole. So this is why people have the Bollinger Bands, but I don't know, they're always talking about touching the Bollinger Band, but I'm thinking about is this hole here and this hole here. So once those voids are filled, once this is satisfied, this was satisfied and it's over. I call this the shipwreck boat void fill. I call this the Bermuda Triangle, and this is the Pyramid of Giza. And there's the this is where you create the three-dimensional view, right? This is the side of the barn. This is the place to start selling. For the scalp back to here. Obvious, right? And we're cashing out as it goes up into that. Now, how big are we long for the ride? Half hour robot just went long. The 1 hour's been long. And it was when it plunges below the Alexander Elder trades at 13 EMA. But using his concept, every time the market dips below the river, you're below the cloud, you're buying like a whore. And I don't mean cloud trading's offset. I don't get that. That's like some kind of like psycho cloud. I mean, it's like taking, you know, I don't know what these guys are thinking. I'm not going to tell you it doesn't look like the most gorgeous chart, but it's really like, it's like, you know, come on. The rule list is you feel like you're going to a Tai Chi class where you've got to learn all these things, these dances. And there's a certain name for everything, you know. But I like redneck trading. Should we buy or sell? I don't know. Let's look at the moving average. It looks to me like, and I mean, tight as it gets, linear weighted. Exponential is garbage. I just try to run it. I just try to build this robot on that. Oh, this is like a visual bot. Okay, so we're long and we're waiting for the 109 again. So the 109 was satisfied, which was this void here. This is the void that was filled. The next void that we want to go for is this one. And before that, we got to go past this wick, which is the void here. So we smash through that, and then we just blow out the top. That's the conventional wisdom of this phase of the market on the 1 hour chart. This doesn't necessarily mean it's going to happen, but this is the typical scenario. And this is wave 2 maybe, and maybe wave 3. If wave 3 is the biggest wave 3 is yet to come. People speculate ahead on that. Then there's this vacuum, which goes way back to here. So once we start to fill that, this guy, look, goes all the way back to here. Once it starts to fill that, then the last vacuum would be all the way back to this 20-yard line when everything started and everything fell out of bed there. So it's just void upon void. This void was filled. If you started buying here, you can see the trade plan. You just gobble up all this shit. You have big canvas orders here with wide stops. You're buying every 20 pips, but you're buying very lightly with a wide stop. What's the other answer, right? In getting that sizing right, now you might want to run that on a different account, because if you take a scalp approach and you're in some hairy position and you're like, you know what, I haven't written that script yet, I'm just going to get out of everything right now, dump everything, then you have the other account that's lightly in on a whole different level. I like that when people say that's on a whole different level. Well, yeah, the depth of ratio of risk of sizing to stop, that ratio, and the time exposure. How long do the orders last? Now, if they last all week long or all month long, you're willing to capture this plunge, this say you started buying right here on the first time this fell out of bed was right here. This one right here, this doji right here. So if you look at this is your entry, your sell stops and buy stops. Now they trapped you here, but this is where you made a majority of your money on a stop entry system. And the buy stops would be triggered here from a mechanical entry standpoint. But what if you just bought with blind ambition the next 60 pips? You have enough money in the account. Always presupposing that little trick. And you're going to cash out of maybe 50% of the position here and let the other 50% ride. I'd put that on another account. So each scheme gets its own account. And I really wouldn't trade more than one currency pair, only because what's the point? How many chicks can you fuck at once, right? I like these guys say, well, I got 20 girls. I'm like, okay, but like, aren't they like, isn't there a fight with one of them? You get one, you get a big roll of duct tape. We all know the plan. So, you know, you can have two currencies, but honestly, if you want two currencies, just have buy and sell tickets on deck, right? If you can't decide what to do with one currency, how are you going to decide what to do it with two or three? But I understand the anti-monogamous. You know, a chick could follow one currency probably. If I have some yen, you know, you got to pick an Asian girl to trade the yen, or it just doesn't work out. But, you know, this is the kind of thing that if you're going to do it approach it like that, then for God's sakes, keep it simple, man. I don't understand this, wanting to, there's plenty to worry about with one currency and all the, volatility and all the swings it has. So you can swing trade it and scalp it. You can see the scalps are short term. Just change the time frame. Fuck, I love when people got like 8 currencies. Did you ever put up 8 currencies on a 5-minute? They all look the fucking same. I got this spread here, I got that, I got a... Who's managing all this shit? My God in heaven. Who can do it? I guess I don't have the skill set. I just suck. I can't take care of... if I had 3 kids, I'd kill 2 of them. Let's say, you know, this is a late-term abortion. I can't manage all these children. I'd have them raise each other. That's what I'd do. I'd say, you know what? I'd have the master child. And I would train him, and then he would delegate. Just take the oldest kid, right? Just hire him. Pay him off. Hire. How are people raising these kids? And half they're spinning out. They're spin outs, right? They're killing people. What the fuck is with these people? Oh, man. Who can manage this stuff? Anyways. So the currency thing is, just pick one pair. Now, I would say if you want to see a lot of volatility, pick the pair that fits the volatility. But this going back and forth, who's writing? You know, the thing is, if you've written a script for one broker with one ATR, at least the ATR range fixed, how are you can't go taking this and setting it over there, right? There's a reason there's a diesel truck's got a 13 whatever gearbox, right? Big gearbox on a tractor trailer. We used to drive these mini bikes. They had one gear and a clutch. They got really hot and burned your leg, and so that was interesting. I'm like, wow, that's good design there. Of course, I think we were torturing the motorcycles back then, but well, torture creates heat. Okay, looks like we got a buy signal here. We're still holding the boring 4-hour. It looks like paint drying here. But this tells you what to do. If you want to be told what to do, you gotta have a rule system, you know. The idea is to make your own rules, right? Now, the 1 hour says that we should be, if we're long, we should be long right here, but I wouldn't chase it. This is like the net. If it goes up like 3 pips, I'm not buying it. I'm already in. So this is the hardest part. Am I in big enough? Or am I in too small? And what do I think is going to happen in the next 3 hours? Are we going up? So on the 4 hour chart, holy shit, right? As far as void filling, and this is your perfect entry. A hammer right at the fulcrum of the 4 period linear weighted moving average. If you're a trend trader, I'm thinking 4 periods the ticket. The 4 period moving average. Because I've run the 4 period CCI. It looks beautiful. You could run a CCI on this. But this takes a lot of the guesswork out. If you don't feel comfortable looking at naked prices. And of course, this really shows you the top-bottom failure back here, actually. If you consider 4 period, this bottom is supposed to become a top and it doesn't. And then this is supposed to, sellers, right? We're trapped and we come down here and we get this failure to complete. And easy to see the swing high, swing low story. And here is the robot is tricked into thinking that, hey, we're going up. But of course, on the dailies, you're still in down. So the 4 periods facing down, that means that you want to have your, obviously you want to have the thing going the other way, right? So it's like the Taylor method, right? There's like a 3 days on a Taylor. Anybody seen Taylor method trading? That's very just like the last 3 days. That's all that matters. I know people like to make these huge speculations on giant waves that haven't happened yet, but I just don't think there's anything you can do about what's going on right now. I mean, you can't change the past, so you can only ride what you see right in front of you. So, say you run over this person in the street, and accidentally, of course, right? Not aiming at anybody, but that stuff happens. But in the market, you can make money from that situation. So it's a guilty pleasure because you're like, oh, look at that. I think comes smashing down here. And when I used to trade without stops and just had my account with stops, when you could trade when the markets were kind of like the Wild West, I suppose, there was like requotes and all this harsh battle with execution. But now the spreads are tight. People are running robots. People are running, but this is more dynamic. I don't think a robot maybe is going to sit here and do what I'm doing with all these tickets and all these different time decays. I just think the overhead would have to be running on one of those servers somewhere, right? That you're renting. You could write that robot, put, I don't know. If you're launching scripts, hotkey keyboard, then you're taking, it's like having a, like automatic transmissions kind of suck. Got this car, automatic tranny. I don't know. I'd rather downshift a little bit, save the brakes, kind of freaking out, I'm like, oh, I can just let off the throttle here and never use my brakes. To me, that's script trading is a manual tranny. Now, automatic trading, yeah. And it's not as good as an automatic tranny, let's face that. Right. Okay, here's a pullback, buying opportunity on the 5 minute. So the sellers came in here at the new highs, right? Breakout, 4 pips up on the 4 pip pullback, 4 pip pullback. 5 minutes robot went long here. Now you got whipsawed, right? A little bit. There's no 10-minute chart. We have to go to the 15. So he went long here half hour ago. He's getting whipsawed. He had a cash out of something there. And I'm just speaking in terms of you trading. All right. So the sellers came in there. We took profits there for the scalpers. Now we'll put buy limits in again. Ready to buy in any pullback. If I think it's still going to go up, and I'm not in big enough yet. So here's where I'm going to drop the buy limits. And buy limits are going to be back below the breakout. So there's typical come up there, breakout, pull back, maybe pull back real deep. And that's why it's hard to make money. Because unless you take those 8 pips that you were in really big and get out, and then you got to get back in. The goal is to have a constant position of some type running. And now if you buy and sell, you'd be up on your sell right now. But if you're getting out of your long positions, you have to consider that you did sell. Like if you scalped out there. So half the time you would be flat, and half the time you would be long in a buy-only system. And in a hedge system, maybe you're always in, and you're just legging out 50, 100%, 150%. But it really depends on it. So that move right there was ratio-wise from this bar, the ATR expansion from this bar to this bar, that's it. You had to get in here fat, and you had to start getting out there. Maybe you're still slightly long. And maybe you got out of something on the way there. See? If you sold here heavy, and you cashed out here and here and here, and you had one that could have cashed out here, and you let it go, then that finally got out, right? And that big, right, that's the perfect trade. You're in $1 million position here, you're out of $500,000, you buy $250,000, and you dump the whole thing here on the climax of filling this hole. This is the next target, is this vapor lock here. Then ultimately past the 109.20. Here we're getting follow through. Now we're going to buy again. So now we're going to go chase it. We can go for the next. We're going to try to make 6 more pips. And I'm going to buy on limits if it pulls back. This is a half-hour limit order down here. So this is what it looks like on the 4-hour. Believe it or not, that's what it looks like. Now I wrote that on a, this is actually, these are not random numbers there I put in. It's the hidden Robinacci entry. Here is super tight. This is like I gotta get in. This is I don't want to miss it entry. Here's what it looks like on the 4-hour. And gee willikers, do you think it's going up? So the 1 hour bot is winning. He went long 2 hours ago. And of course the humans can see the rectangle up here. Or the void up here. Okay, another price pulse. And the top of the hour is here. So we expect a big climax now. Something's closing somewhere. Maybe something's opening. I don't know if New Zealand opens now. Something's happening at the top of the hour. Maybe news is coming out. Of course, if you're trying to make money by the hour, I'm sure a lot of people and a lot of the robots that are written to run on the hour. Here we go, 10 seconds. Expect a burst. So the other high probability event is the top and bottom of the hour. That's right. It's as old as time. I mean, it's as old as, it's so cliche that you just, you always wonder. People are always talking conspiracy, but I always think, well, time is, okay, so the top of the hour is come and gone. Do you think there's any follow through to this move? Or is this going to be reverse on a dime with a shaved candle? Shaved, wickless. Yeah, if it was all wickless trading, right? And the perfect, how about a line chart without wicks? There's a perfect closing price, no price fluctuation. So with a wide enough stop, but in that you have to be dancing with the market. Then you got to get in, out, in, out, in, out, right? You got to dance with the market. Don't let them hit your stops. And don't let it hit your profits. You have like these giant dream profits that'll never get hit. Or you have trade plans where it literally takes profits, rarely gets stopped out. It's always taking the easy money. Okay, so big sell here. Sellers are coming in. As we climax up. We just made a higher high. You see that on the 15 there. Another breakout pullback. Breakout by a tenth of a pip. Pull back 4 pips. So if you sold up there with a limit order, a big monster limit order, trying to make 4 pips, you just make 40 bucks right there, risking 20. Right. You could hand place the script up here. You can see you would have got filled, right? One thing about the charts is you can see where all the cells would have got filled. You can't see if you would have survived the spread expanding. But you can see the cells. You cannot see the buys, whether they got filled. So here you can see by a tenth of a pip there, you could have your orders in like that. And you could get in that that tight, right? Okay, wait a second. It really does matter how big you're in, because can you run a tight stop like that? Sure. But that trades over so quickly. If you go to the 1 minute chart, that trade is like over. Like really? Look at this. That's a 6 pip pullback. All right, this is a that is a 2 pip grid. 2 pips on the dotted lines. You're up 4 pips. You're already out. So we're going to dip below the 109. I'll buy more. 1 minute chart, and the 1 minute robot, he's long for, he's in here for the crossovers there. If you're trading at the market, you just pull the fucking trigger here, right? Either buy stop stacking up as it's walking down on the 1 minute, that's 7 minutes of drift downtrend. And you got buy stop stacking up above that you're canceling every 1 minute. You're not going to do that, right? You're just going to buy, every minute it's going down, you're by more dramatic sell off the better, right? And you have a grid every 2 pips you're buying on limits. Just like here, all these are all limits beneath here. So when it comes crushing down in, it should be filling that. Now I'd put a buy stop in. It's going to last 15 minutes though. And it's might as well just be buy at the market, really, because if it goes up, now I could buy at the market here. 109 again. 1 minute chart. So we've had the double top. We've had the 1/10 of a pip trap up here. Amazing, right? But it's just how much you're in here. 5 standard lots here to get out here at 109. 6 pips with a 2 pip stop. So you can see your the spread is under a pip. Did not get stopped out. Just trade really big. That's always going to be the answer, right? Bigly. Trade bigly. And then trade small when, like say you were selling into this high volatility move. You're selling small. And notice the limit. If you're putting limits right up on the 2-yard line, 6 pips. And you've got the safety of the, a lot of people want to have this safe moving average safety net. Okay, buy stops now. Buy stops again, just really buying at the market. Okay, now I wouldn't touch it. Let them fill that inverted hammer on the 1 minute. The robot just went long. The 1 minute scalping thing. You don't have to wait too long on a 1 minute chart to make money or lose money or see a setup, right? Okay, robot's still short technically. Until this closes the 1 minute, we don't have a confirmed crossover. We have to wait, looks like 30 seconds. So we went long on the, on that inverted hammer, 1 minute inverted hammer with the crossover. It's combining candles with the moving average. Like here's an inverted hammer just before the crossover on the 1 minute. Inverted hammer, sell. Hopefully you already sold this mini vacuum with the 2 pip stop. And this is the maybe your sell stops are here. And you just sold at the market because you just like that sniper feel. Be that sniper. Now you could just go, now you're in buy mode. Crossover, this is the pullback on the 1 minute. And put another buy stop in, another trend trade. Then the plunge orders are going evaporate in 15 to a half an hour. So if we do come smashing back for some reason, the other thing is that if the stops are so tight on the orders I'm placing right now that it goes flat, then it picks up the other bank. That's the ultimate, right? You're stopped out. You hold your equity. Market plunges down in. And the time of day matters. This time of day is very quiet. And you could trade the 1 minute chart. When things come off the rails, you just got to imagine this 1 minute chart. It's just going to look insane. I guess you could say, hey, let's buy it. It's going up. As long as it's above the white line. I don't actually trade the 1 minute chart with a 4-period moving average. I usually just put a grid of orders in there and just hopefully I got the ratios right and the placement right, because you got to be see, just went in sell mode there. This is where the buy limit bank might get picked up. So buy stops. I'm going to put one more buy stop in. Then I'm going to leave the limits there. So if I'm wrong, they stop me out, it goes flat. I pick up the orders down there, and hopefully I wrote those properly. Certainly don't want to spend time placing outlandish orders that never fill. So if I can hit a double click and launch a whole series. So for instance, I don't think we're going to drop 30 pips tonight, but if we did in 3 hours, I had this, it's going to buy this spike down here, for instance, right? This is a progressive entry down here. It's going to buy really bigly as it goes down there. And there's like kind of a soft, and there's a master stop down here. This stop is for all those tickets. But that's a completely unconceivable in the next 5 minutes that it's going to, but in 3 hours it could drop 30 pips. So I made it, it's a 10 pips an hour. So I can post this thing in the hightail. This platform, the way it's rigged right now, this is just current rigging. I pretty much build the buy side first because it's too much to focus on, and I just trade one currency per. Now here's the pullback, so we could still crush down here. There's a potential for a huge pullback now. The 1 hour chart says that was the. They're up 6 pips on that, selling the top of the 1 hour. Bravely standing in front of an up market and selling that for a 6 pip pullback. Now the 1 minute robot should be getting long. On stops, there's a 5 minute walk down, and you have a kind of a hammerish thing. Moving average just went into buy mode again. And you're long for the next, okay, now they're trapping you on the buy stops. We have our backup plan is to buy on limits, should it plunge. Now we could go zippity-doo-dah all the way back into here. And we've seen that a million times. So I'm going to put a deep state order in. Another big plunge order, progressive. And I'm in just the right amount of margin now, so I'm just going to let it fly. This is a moment of truth. We're holding 109, and it is the 15-minute charts are going to update here in 2 minutes, so we could get a big psycho plunge right now. Possible plungeola. And it would only make sense because you're up against this triple top on the 1 hour line chart. 1, 2, 3. So this is the shoulder level. This was the big head. This is the shoulder, sell off, come to the breast area. Right? This was the big step in front of a car and buy this whole thing down here for this just beautiful scalp into the floor, but a lot of zigzags. It's a very zigzaggy market. I would trade candles on the 1 minute chart. Candle by candle, of course. Look at the low ATR here on the super low ATR just before the crossover. Short, still in short mode. Buy stops are stacking up here. Committed to buy limits all the way down to this. And if we only get a retest to here, then that would be the trade, right? So the market's going to fit its own. The plan fits itself. It trades itself. Okay, now this would be the trap. If this is not going to keep breaking out, maybe it does break out. So maybe it does plunge here, then this becomes the new trade. If your stops are super tight at 2 pips, it goes flat. And then it makes it up on the limit strategy. Now we're going to look to the 15-minute chart in the rearview mirror, because the 15 minutes have just updated. So you pulled back. You've had nothing but a 15-minute pullback. And if it can't keep tanking, so you have to ask yourself on the 15, if the scalpers started selling this 4-pip window, and the guy that sold really at the tippy top and stood in front of that irrational exuberance, and they wrote it back to just to make this much pips. If there was target was here, they're not hitting it, and it has to kind of walk down into that, right? And if this is the only chance to for the bears to get out, because it's possible we're going to at least come back to the if you're doing that Fibonacci stuff, I heard there was somebody out there doing Fibonacci, God forbid, but if you are doing that, if you can, this is the high, and this is the from here. This is 100% retracement, but this is the 38%, right? 38% below. It's just, all you're saying is, oh hell, 50%, 38, right? But you got to put an order down there. If you're really trading the fib, you should have an order on every fib handle, just pending. Okay, now we're going to go with the buy stop. Just going to get in here on this. Here's the new void. Right, so the new void's already formed. We've got a wedge. You got a nice, perfect walk down here. Double bottom on the line chart. That's a triangle right there. So just one pullback here is a 1 minute triangle. Could still possibly come back in the next 15 minutes, but now we could drop for another 15 minutes. And the question is, do you put a sell stop in here and ride it down for that plunge? Well, if you put a sell stop in to protect your sell stops on these current positions in the market, and you go, and the account goes flat, but it picks up a deeper bank, you're not in anything. You freed up all that margin. So this is the thing. If the margin in a minute, mister, the margin comes down when you have this available margin. This is why I don't like these long trend trades, because you're locking up all that margin, waiting for a payoff that never comes, right? And you're waiting for this. You kind of have to have a little bit of fun on the scalps and being really hairy, and then, okay, now you're going to trade like very Spartan, very thin, very small. All right, we're waiting for this to go up in a minute. 4 more pips. I gotta go beat this guy's head in. I got a guy here, he wants some drugs.